second part of the video from yesterday about how to trade with the power of 3, accumulation, manipulation, and distribution. Now, this is a chart from yesterday that I showed you guys for USD, and this was another part that I forgot to show as well, that I should expand on probably, just showing more demonstrations. And this is actually a trade that I also took as well, and I thought I would just kind of show you guys on the thought process and how you could trade using the same strategy again. Alright, so here we first, obviously, remember guys, you need to check your sentiments, daily bias, all sorts of things like that. But at this one, I'm just going to talk about the AMD and how I used it, already knowing my daily bias ahead of time of this. So we had created a breaker block over here, right? And from this 3 candlestick pattern right here, there's liquidity right here, it got disrespected right here, but then it ended up getting validated, and we see it's getting validated here. And we also have resting buy side resting liquidity, which is this line. So we see that price, this was the we see here around Asia session time, price when it opened up in the market right here, this, and we have our initial support lines as well as internal sell side resting liquidity right here. We have a 15-minute fair value gap, which is created. Well, it could really be this whole thing, but really only worried about this part. We have 15-minute fair value gap created right here. Boom, we have this. We have a price range created right here. If we scale out to the 30-minute time frame, you can see it. We see our range being created. We scale back down into our 15-minute time frame, and we see our range being created. Once again, this is our manipulation. Right here, these strong candlesticks that are moving aggressively in and out, big body candlesticks, that will be our manipulation. We have this range right here. We have this line of support right here. It's trapped. But when you see these big breakouts over here, that is signaling to be our manipulation. And this is occurring during the London session right here. And we also had a very strong confluence, 3 confluences right here, specifically from this candlestick right here, that are showing us that it will be a bearish market and the markets are looking to go down. First of all, we have an entry back into our breaker block. So that's one for filling more orders. Then we have a super liquidity up here of this buy side resting liquidity. We have super liquidity, and this is our manipulation. So these are 3 really strong signs that the price is gonna shoot back down. So what ends up happening? You see this candlestick right here. We have a big drop down back into the range, as well as creating a 15-minute fair value gap. Boom, we go back into the range. We enter the fair value gap. We leave the range, and this would have been your entry right here. On the entry of this fair value gap, we would put it all the way back into the breaker block in case I wanted to have a retest. We will use our standard deviation tool to mark out where price would like to go. And this will be one take profit. Second take profit would be right here. So that would be your first entry, right? But if you want to wait for more confirmation, or you just simply missed out on it because you were asleep, or you just weren't on the charts right now, this all occurred during the Asia session, the Monday New York session. So if you were to have missed that entry later out the day, right? Oh, we also have this 15-minute fair value gap, as well as this reversal zone, which price, when it entered here, it seemed to contemplate reversing. Oh, we had a reaction of pretty strong reaction. No, a really weak reaction right here from it. Price, it created another range right here, but it kept on testing its range. Ultimately, decided the fair value gap got invalidated, as well as a reversal zone. So that means that price is likely going even more down. Right here, we drop all the way down into here. We don't fully sweep it though. We don't sweep it, but we draw near the support as well as internal sell side liquidity, which is this line right here. So what ends up happening around the New York session, London session time, price comes back into this range and decides it's not a strong enough range for it, so it ends up drawing back into this range, which is a retest into our range to fill in more sell orders right here. This big candlestick right here, which happens during pre-New York hours, market hours right here. This candlestick, this would have been your second entry that you could have taken literally the next day. You would have preferably would have had a smaller stop loss up until right here. And same thing, look for, we didn't sweep this area yet, or up until these lower levels, as well as this area of sell side risk and liquidity. So obviously I would want to target, this would be my first take profit, and I would want to target this one as well as this 15-minute fair value gap. So these would have been your three targets. This would have been your other entry to enter on. Right here, how many pips is that? That would be a pretty good trade. Anybody who would be interested would have taken it. So that's already three trades. Just off simple reading price action and just using on the AMD strategy that I took. I made pretty good amounts trading this. So here are your two trades you could have taken. Well, I guess this one right here, when it comes around here, that would have been two trades right there. And this is, you don't want to trade this whole area thing, this whole area. This, you're not trying to trade this. It's just nonsense. You can't, I mean, why would you want to trade any of this? So you really got to find specific hours and market times, because just don't trade this kind of stuff. It's just chaotic. You should try to capture the movements like this movement, the clean movements, the ones that occurred during like a London session or a New York session. You want to try to catch those movements, not the range. We don't care about trading the range with the AMD strategy. We care about catching the distribution. Here is another trade taken with it. So around New York lunch, PM hours, we create a range, a small range right here. We create a range first, and a lot of this is also going to be intuition. Honestly, it's going to be intuition as well. You got to really just kind of know what you're looking for over the time. After countless hours of reading the markets and everything, you get a sense of understanding of it, and you read stuff. It's like reading a book almost. You read the story. So here, you see we have this retest of this fair value gap right here, as well as a sweep of this liquidity. So I'm like, okay, but it creates a range. We have a pretty reaction off of it. Didn't enter really much of anything. Once we return back into this range kind of aggressively, we had this one candlestick out exit, pretty strong entry back in. I realized, okay, this is the validated range. This is our validated range, so this will be our manipulation. But it's not enough to enter based off of. Keep in mind, we have this area of sell side risk and liquidity, as well as this one, which it's important to go back on all your charts and mark out areas of sell side risk and liquidity. This one right here. So I'm looking to take a trade on one of these two. This one might be your first take profit, second take profit. Before that, our entry. So to find your entry, you could have had two entries in here. Obviously, first you have our standard deviation. You would apply that. This will be our manipulation. And this is the second range that got created up here as well on the 5-minute time frame. So for your entry, this will be ideally your entry right here. Right here. This retest back into the range is your entry right here. And you guys, I told you, I spoke about this in the last episode. Most times, a lot of the times, whenever you see this formation, this is exactly how it will happen. You have the manipulation, the range happens, you have a manipulation. First, you'll have price start leaving on it. Once it starts going towards there, it will leave the area. You want to wait for candlesticks to close outside of the whole area. So here would have been your first entry. when you have this will be this candlestick right here. This red candlestick will be your the first candle that forms outside of the range. So that's signifying that price left. So you're waiting for a price to enter back in. That would have been your first range. Take profit right here or right here. First take profit, second take profit. But if you would have missed out on that one, if you would have missed out on this one, it would have been okay. This is your second recess into the range. We come back into this range, which I would consider the true range, the true range that I wanted to go up to sweep orders in or fill more orders in. This would have been your new range. You enter right here. Once price already left in front of all these candlesticks, over time it slowly starts building back up and it comes back into the range. Boom, right here. This would have been your second entry. And take profits all the way here. And there's just many more examples that you could do on this. This strategy, it's obviously, you guys remember, you combine this strategy with other factors as well and other confluences and PD arrays. But this is just a way that this is a very great strategy to add to your other confluences and mix with them. But